Welcome to this explainer for July 26, 2026. Look, if you've been glaring at the charts lately, you know exactly what I'm talking about. The markets are incredibly loud, volatile, and honestly, just exhausting. So today, we're going to take a collective breath, step away from that daily chaos, and look objectively at the comforting mathematical realities of Bitcoin. We're stripping away the emotion, right? We're going to look strictly at the data, the actual health of the network, and a fascinating mathematical model that's quietly governed this asset for over 15 years. To really understand where we're at, we first got to acknowledge how everyone's feeling out there. Right now, the fear index is flashing exactly 26. Now, that puts us squarely in fear territory, which tells us a lot of investors are feeling exhausted and just incredibly anxious about these recent price dips. It's exactly the kind of environment where emotional decision-making takes the wheel, and people start questioning their entire long-term strategy just because the short-term pain feels so intense. But hey, it is completely normal to feel that way. And as legendary trader Jesse Livermore famously put it, the crowd is always wrong at the critical moment. Moments of peak fear are historically the exact moments we need to zoom out, quiet the noise, and just look at the facts. When everyone else is running around panicking, the absolute best thing you can do is anchor yourself to objective data. And to do exactly that, we're diving into the power law model today. If you're not super familiar with it, it's essentially a statistical model based on 15 years of Bitcoin's price history, showing how its growth follows a specific mathematical curve based on time. But honestly, I find this is way easier to grasp through a simple, comforting analogy. Just think of Bitcoin as a growing tree. Think about the stark difference between a tiny sapling and a massive ancient oak tree. Well, a young sapling's growth is, super fast and chaotic, whipping wildly around in the wind. An older tree grows entirely differently. And Bitcoin, it's much more like that older tree now. Sure, it grows slower percentage-wise each year as its annual growth rate naturally tapers off, but it's building massive, unbreakable, highly predictable structural roots. The sheer size of the network just keeps scaling up, creating this rock-solid foundation that gets harder and harder to shake. Okay, so let's figure out exactly which branch of this tree we're actually sitting on today. To figure out if we really should be fearful right now, we need to compare today's price to the model's projected fair value. Just look at the sheer contrast here between where we are and where the math says we should be. The current price is sitting at $64,521. But then check out the 2026 power law fair value, which is basically the mathematical center of gravity for this year. That is sitting way up at $180,242. So what does this mean? Because we're sitting roughly 64.2% below that fair value trunk, the data is screaming that we aren't in a crisis at all. Historically speaking, we're actually in a deep value long-term accumulation zone. We're heavily discounted relative to the network's mathematical baseline. When you view it through this lens, the current price isn't a reason to panic. It's a structural anomaly that heavily favors the buyer. Now, I know exactly what some of you are probably thinking. You might be a little worried because, yes, we're currently 14.8% below the 2026 floor of $75,702. And I get it, falling below the current year's floor feels a bit scary. But let's take a look at how the system's true safety net is actually constructed. Yes, it's true we are dipping below this year's current floor, but focus your eyes on the bottom row of this data. We are safely hovering 19.7% above the 2025 floor of $53,889. The model actually reveals a really surprising secret here. It's not the current year's floor that acts as the ultimate safety net, but rather the previous year's floor. That right there is the true, unshakable root system we were talking about. This previous year's floor is literally the undeniable bedrock. When you backtest this against 15 years of market data, it reveals a pretty staggering fact. This specific line has experienced exactly 0 breaches. 0. It survived catastrophic black swan crashes, like the whole COVID-19 shock in 2020 and the FTX collapse in 2022, without breaking a single time. Even in the absolute worst-case scenarios imaginable, the price has always maintained a safety margin above that previous year's floor. So, with our structural roots thoroughly verified and intact, let's go ahead and check the actual vital signs of the network today to see if there's any real internal reason for all this market fear. I want you to look closely at these on-chain metrics because they mathematically prove that underneath all the emotional panic on social media, the network itself is remarkably stable. This kind of dashboard is great because it completely strips away trader psychology and shows us exactly what the money is actually doing on the blockchain. When we calmly read through these specific metrics, the story is just incredibly clear. Valuation metrics like the MVRV ratio are sitting at 1.19, which means investors aren't sitting on massive unrealized profits that they're desperate to dump on the market. Plus, leverage indicators like funding rates, they're perfectly neutral at plus 0.003%. Throw in an RSI of 36.5, an NUPL hovering around 0.16, and all of this objectively confirms a healthy, undervalued state with absolutely zero signs of toxic market exhaustion or overleveraged greed. The system is just quietly humming along, totally unbothered by the external panic. So, knowing all of this, knowing the math is entirely on our side, the network is perfectly healthy, and our structural roots are completely intact, how should we as focused investors actually behave? How do we comfortably weather this temporary emotional storm? Well, we simply hold our ground using what the sources call the no reset discipline. First off, you never panic sell, because selling permanently resets your ability to compound wealth. Second, you trust the mathematical floor. If you're using leverage or loans, you've got to structure your safety net so your liquidation level is strictly below that unbreakable previous year's floor of $53,889. And finally, just let time do the work. Because the power law floor naturally rises every single month, time automatically acts as an escalator for you, constantly growing your safety margin without you having to lift a single finger. That wraps up our explainer for today. I'm going to leave you with this final thought to ponder as you log off. When you look at your portfolio during times of high volatility, are you letting the daily weather, the blowing leaves, scare you? Or are you trusting the deep, unbreakable roots of the math?